We're going to talk about the material variances on this particular problem. We have a company called Harmon Household. They manufacture general household items, and one of these items is a chopping board. And this particular chopping board requires expensive hardwood. During a recent month, the company manufactured 4,000 chopping boards, and they used 11,000 board feet of hardwood. The hardwood cost the company in total $18,700. The information given to us is that the standard for one chopping board is 2.5 feet. So what we're going to do is we're going to take step one and calculate the standard cost of a chopping board. In order to do this, we need to take the 2.5 board feet per chopping board and multiply it by the cost per board foot, which is $1.80 per board foot. So we get $4.50 is the price, the cost per chopping board. The company manufactured 4,000 boards this particular month. So if we take those 4,000 boards, the expected cost times the $4.50 would come out to $18,000. Let me put a little dollar sign in front. So when they ask us, what is the standard cost for the wood that should have been incurred to make the 4,000 chopping blocks, chopping boards, okay, we're going to take again that standard quantity allowed per chopping board, okay, and we're going to multiply that by the 4,000 units times the standard price we said was $1.80 per board foot. And that's where we came up with this $18,000. The second thing that we're going to have to do is compare it to our actual cost. You could see that they gave us that information, and most of the times always will, that we actually spent $18,700 for those 11,000 board feet. At this point in time, what I want to do is I want to take that $18,700 and divide by 11,000. Just to figure out what my per board foot rate was, and it came out to $1.70 per board foot. Now, I'm doing that because I want you to keep that in mind for in a few minutes we'll use that. Okay, so how much greater or less is this than the cost that was incurred? Well, they're referring to the $18,000 that was the standard. So in essence, we spent $18,700 for those 11,000 board feet. So our spending variance, or our total variance on the purchase of these boards, okay, was $700. And we're going to call that unfavorable, right, from the standpoint of, the fact that we spent more than the standard. All right, so that's our spending variance. And if you look at the little diagram below where I have the standard quantity times the standard rate, and the actual quantity and the actual rate over on the opposite side, the total direct material variance, or the spending variance, is the entire difference between the $18,000 and what we actually spent, $18,700. What we want to do is calculate what should have been spent for the actual quantities that we used. And we want to differentiate that spending variance, or break it into its two components, which includes, did we pay too much for the boards, or do we use too much material in making our chopping boards? Because when we went back and we calculated in step 2 the price per board, it was actually less at $1.70 than what the standard was at $1.80. So that's odd that we should have an unfavorable variance when it comes out that our actual price was actually $1.70. Okay, so when I multiply the 11,000 board feet times $1.70, again, we're going to come back to the number they gave us, 18,700. When we come back and we look at what is the standard, every chopping board requires 2.5 board feet. If we take those 2.5 board feet and we, again, multiply it by the 4,000 boards, that will tell us how many board feet we needed. Okay, so let me just do that math over to the side here to make 4,000 chopping boards. It said 2.5 board feet times 4,000 boards, chopping boards, equals a total of 10,000 board feet. We purchased and used 11,000. Now this is premium expensive hardwood, and as you know, wood has some flaws in them, sometimes knots and stuff, so we would have had to cut around those pieces, and so that would be waste, and so that's perhaps one of the reasons why we used more than was the standard. Again, coming over 2.5 times 4,000 chopping boards, 10,000. 10,000 now times the standard rate of $1.80 tells me we should have spent 18,000, which of course we knew that. We calculated that up here in step 1. Okay, so what we do in the center is actually what we call the flex budget. Okay, if I use the actual quantity, if I take that 11,000 board feet and I had multiplied it by the $1.80 standard cost per board foot, okay, that would tell us how much we should have paid for those 11,000 board feet. 19,800. Hit the wrong key, apologize. So when I want to calculate my variances, my price variance, I'm actually going to isolate on the difference in my prices. So a price variance, by definition, equals the difference in standard minus actual cost per unit times actual units. Sorry about the spelling. All right, so let's look at that. $1.80 per standard. The actual, $1.70. Put parentheses around that. 10 cents a unit. Think about it. This should be favorable. 0.10 favorable variance. We paid less. But I want to take that number and I want to multiply it by my board feet. I have 11,000 actual feet. So if I do the math on that, I'm looking at 10 cents times 11,000 feet equals $1,100. And I'm going to put in favorable. Again, because we were 10 cents per unit less than standard. Next step, the quantity or usage variance. Recall that we said 2.5 board feet per chopping board. 4,000 chopping boards came out to 10,000 board feet. We used 11,000 board feet. So again, when you're calculating the usage variance, you want to isolate on the difference in the standard, and I'm going to use the word allowed for actual quantity produced, which are the number of chopping boards, the final unit. Now minus your actual quantity. I'm going to abbreviate quantity. And then what we're going to do is we're going to take that difference and then we're going to multiply it by our standard cost per unit. So that would be my board. Okay, so let's look at this again. This difference in the standard allowed. Well, 10,000 board feet is what we're allowed for the actual quantity produced, those 4,000 boards. Okay, what was my actual quantity? We used 11,000 board feet. Difference, 1,000 board feet, unfavorable. And again, when you capitalize it, unfavorable usage. Now we're going to come back up here and we want to multiply this because right now it's just quantity of units and it has no dollar value, but we want to multiply it by the standard cost. That standard cost, $1.80 per board foot, okay, gives me 1,000 times $1.80 is going to be $1,800. Unfavorable, as we said, because we used too much for according to the standard that was established. So coming back into our little diagram here, if I move that line down a little bit, the price variance we said was going to be $1,100 favorable because we saved 10 cents. Notice that the difference between the 19,800 and the 18,700 is the 1,100. Now, we calculated a quantity variance, usage variance. That was the 1,000 board feet at the standard rate of $1.80. That came out to $1,800 unfavorable. So when we combine the two things that have occurred, the price variance and the quantity variance, we net to unfavorable $700 spending variance, which was the difference that was initiated up front.